Hello guys, how's it going? It's Daniel Effect right here. So I welcome you all to our first mentorship video. On this mentorship, which we're going to be talking about liquidity. So I advise you to get a notebook because each and everything I'm going to be saying in this video is going to be very important. So I advise you to get a notebook so you can jot down every single thing I'm going to be saying. So if you watch the chart very well, there are a lot of L's the chart. So you notice that these are levels that I've marked out, which I will be using to explain what liquidity is all about. Good. So let's move on. So liquidity in forex trading, why is it important? Yes, why do you as a trader needs to be concerned about liquidity? So liquidity in the forex market is can be defined by the ability of a currency pair to be traded, bought or sold on demand. Are you getting it? Like when you are trading right now and the market starts reversing, or that's like have a sudden movement or a change of movement. So let's use this chart for example. You can see that the market started selling to the downside from the first AL at the top, then it sold to the downside, then it bought to the upside, then it had a short sell to the downside, then we have a buy to the upside. Then the market sold to the downside, bought again, sold again, buy again, sold again, bought again, sold again, bought again, then the drop, short drop, then before the long buy. So all of this process is liquidity taking place. Liquidity is taking place just like as you can see. So that is what they mean or what they call liquidity. So there are two types of liquidity. We have high liquidity pairs and low liquidity pairs. As a newbie, if you want to be making your choices on which kinds of pair you want to be trading. When you're talking about high liquidity pairs, you're talking about GBP USD, USD JPY, Euro GBP, AUD USD, USD CAD, USD CHF, and NZ USD. But the most liquid like pair that has high liquidity is Euro USD. You get it. So when you're talking about low liquidity pairs, you're talking about all the JPY pairs. So these are all low liquidity pairs. But back to the chart, like I said, I want us to understand why this liquidity is important. It's because take for example the London section is opening, we have the previous section, which was the Asian section. Now we're going to be having the New York section. These are trading times. These are times when the market can be sold and bought. So during these times, liquidity is taking place. The market is buying and selling. It's buying and selling. So what happens during these times is that, take for example, the London session wants to open. It has to do something. In some cases, it does go takes out the buy side or sell side liquidity of the Asian section, or the London section takes out the London session, the New York session takes out the buy side and sell side of the London section. So that is how it goes. So they are what they call internal liquidity and external liquidity. External liquidity are liquidity that are closed to maybe the particular time when the market is moving. Then external liquidity are liquidity levels that may be lower or higher, that they are not maybe in your trading range at that time. So maybe price might get to those levels in the future and maybe sweeps those liquidity, either buy side or sell side liquidity. I'll be talking about buy side and sell side liquidity maybe in the next video, just like you can see I show you guys in the mentorship, because that's everything in this mentorship. But what I want you to understand is that liquidity is all about the buying and the selling. So watch the next video to continue the mentorship.